In the overnights on Robinhood, Tesla is moving up slightly in a down market. And there was really no news over the weekend until just a little while ago that might be cause for that. You see, there's a groundswell happening on X, and it's getting bigger and bigger that Tesla needs to buy at least $5 billion worth of XAI. And people are kind of getting a little angry that they didn't get that chance earlier, that when this idea was first explored over a year ago, people were like, yeah, the shareholders were saying, yeah, Tesla should definitely buy like $5 billion worth of XAI. Well, then they merged with X, and the cry became stronger. But then, with the introduction of Grok 4 on Wednesday night, man, a lot of people are kind of angry that this was not done a year ago. And then finally, there was an announcement that SpaceX was going to buy $2 billion worth of XAI. And this was from the Wall Street Journal and from Reuters. And Elon has actually said, no, this is not true. But we know that sometimes when these things come out, Elon will say it's not true when all it means is they're buying 2.4 billion or 1.9 billion. Anyway, I don't know whether it's true, not true, or anything else, but that just created even more of a clamor saying, hey, we need to be able to buy some of this stock. I mean, the company that we as shareholders would like to have Tesla have a position in this runaway crazy company that Elon has created. Well, anyway, finally, we got Elon responding tonight, and this could be a little bit of why the stock is up right now. Elon says, it's not up to me. If it was up to me, Tesla would have invested in XAI long ago. He says, we will have a shareholder vote on the matter. So there you go. Whether that's $5 billion worth, whether that's more than $5 billion, whether that's some kind of stock swap, how it works, I don't know. Maybe it'll be all part of Elon's new comp package. So many things to be decided on November 6th, which is getting closer and closer. November 6th, not that far away. And then Elon had also said that right now XAI doesn't need the money. They're not looking for additional funds at this time. So, but I can't imagine they're going to stop at 1 million GPUs next January or whenever they're supposed to have that fully running at 1 million GPUs. They're probably going to need more buildings, and they're probably going to need more GPUs. And so eventually they're probably going to need more money, because I don't think they're going to be spitting out the kinds of revenue. Well, now maybe, there's a lot of stuff they're doing right now over at X that could dramatically improve their revenue stream. So we'll see. We'll see what happens. All right. And Pierre Farragut has been on X all day talking about how great X4 Heavy is. Other people have been talking about how great X4 Heavy is. People are obviously very impressed with what its capabilities are. But the news everybody's expecting is that the expansion in Austin has not happened yet. It's only 7:07 right now in Austin, so there's still another 5 hours that we could have that announcement that the expansion is going to take place. However, what was noticed by people is that some of the prep work, these cars driving around kind of planning or doing whatever they're doing with regard to cities prior to the Robotaxi starting, that some of that planning is being done quite a long distance from the neighborhood that it's in now. So this maybe they've decided to do a large expansion instead of just a small expansion. Anyway, who knows? Don't know. Can't tell you. We'll find out what happens. But this is what Joe Tegmeyer had to say about the current Robotaxi effort down in Austin. He says 3 weeks ago today, and now thousands of passenger miles, rides, and all kinds of valuable data later, the Robotaxi service has shown it's real, it works, and it provides a valuable capability that has foundations to scale quickly. Big congratulations to the entire team to safely get through the launch and these past 3 weeks, but now it's time to grow. And Joe, I think, if I'm not wrong, he might have the most rides. He's been down there day after day after day, entertaining people by offering them rides on his ticket. People coming in from other countries and from all over the U.S. Specifically to get their Robotaxi ride, and he's been down there doing it. So he might have more information in terms of the quality of the ride service than anybody else right now. Tesla has said they're ready to expand the service beyond the initial geofenced area, and all eyes are on when this will happen. Is that time today? He says, let's just do this. And then there's this, and this also could be maybe, I don't know whether people would have made any decision that Tesla's worth more than it was a minute ago based on this, but Tesla owns 11,500 Bitcoin at the current price of 119,500, makes that value, the value of that 1.37 billion. But somebody goofed up. It sounds like a Randy kind of goof up. Somebody put 1.37 trillion and wondered how Tesla was only worth 1.1 trillion if their Bitcoin was 1.375. But that person obviously made a serious power of 10 mistake. It is to the power of 9, not the power of 12. Okay, so this is Randy Kirk. Please like, subscribe, notify, and join Patreon. The Wall Street Journal has this: the economic fallout from President Trump's policies may prove less dire than feared. Less dire. How about they said it this way? The economic fallout from President Trump's policies may prove much better than anybody expected. Anyway, economists expect stronger growth. So this is Bank of America does this survey where they survey a bunch of their customers or a bunch of economists or et cetera. And the survey is what they're reporting on now. Economists expect stronger growth and job creation, lower risk of recession, and cooler inflation than they did just 3 months ago. This is according to the Wall Street Journal's quarterly survey. Oh, this is Wall Street Journal, not Bank of America. I'm very sorry. See, I see what I mean? It was a Randy kind of mistake up there. The reason the journal's previous survey was conducted at the height of the president's threat to impose eye-watering tariffs on America's biggest trading partners. He paused some of those tariffs shortly thereafter. So he was playing, he's playing his game. And by the way, he's done it again. And the markets are down at last time I checked going into Monday, probably because he's suggesting he's going to do big tariffs on Mexico and I forget who else. Whether the improved mood lasts remains to be seen. This past week, Trump told numerous trading partners, including Brazil, Canada, Mexico, and the European Union, that they could face much higher tariffs starting August 1st. I think Mexico was 30%. Canada might have been 30 also. I think European Union was 30 or 35. Brazil was 50%. Okay, although economists' outlook improved slightly from the last survey, they still are relatively downbeat, most likely because of the persistence of the trade uncertainty and the muted growth to date. And I will tell you that the prime results were quite strong over Tuesday to Friday, I think it was, that the prime thing was going. Their numbers came back just fine, so I'm not sure where everybody's worried. On average, they expect gross domestic product adjusted for inflation to grow just 1% in the fourth quarter from a year earlier, but that's up from the April forecast of 0.8, but only half of what was expected in January, which was 2.0, I guess. They see growth rebounding to 1.9 in 2026, little change from prior surveys. Has anybody heard of AI? Have any of these economists heard of AI? One, maybe two of them heard of AI and what that's going to do to growth? On average, they put the probability of recession in the next 12 months at 33%, but that is down from 45% in April, but higher than January's 22%. Despite numerous headwinds, the U.S. economy is proving stubbornly resilient, said Chad Moutre, chief economist of the National Restaurant Association. Consumers are continuing to spend, but the mood has clearly shifted from bold to careful. The survey gathered responses from 69 economists at outfits ranging from Wall Street banks to universities to small consulting firms. It was taken from July 3 to 8, and not every forecaster answered every single question. The improved outlook follows 3 months of generally encouraging economic data, job growth averaging 150,000 in the last 3 months, way better than projected in April. Employment rate dipping to 4.1. From the 4.2 in May, staying within its range of the past year. Weekly claims for initial unemployment benefits, an almost real-time indicator of layoffs. No cause for concern. It's up a little, and so are the weeks to somebody finding a new job. Business and consumer sentiment, which were in a free fall early this year, both have leveled off. and actually improved. And the S&P 500 notched a record high this month, multiple record highs, actually. Perhaps most importantly, the tariff-driven inflation spike that economists widely predicted hasn't materialized. Not there. Core consumer prices, which exclude volatile food and energy components, were up 2.8% in May from a year earlier, the lowest in 4 years, though still higher. You hear that? The lowest in 4 years, though still higher than the number that the Fed wants at 2%. To be sure, Trump's policies are affecting behavior. Goods imports surged 26% in the first quarter, and then, of course, came back down in the second quarter because of boom bust. Diane Swonk, chief economist at KPMG, cautioned the official economic indicators, which combine actual data from surveys with estimates, often struggle to capture inflection points, like AI. As for our as good as our stats are, they just weren't made for these kinds of very large moves in policy that cause these knee-jerk reactions. Well, I'm agreeing with Swonk there. It makes it even harder to read the tea leaves. Trump's policies, which besides tariffs include a clampdown on illegal immigration, stepped up deportations, and just signed mega bill cutting taxes and some spending, may also take time to filter into the real economy. I'm glad that's somebody, at least, that's mentioning the immigration policy having an impact on the economy. Some Fed officials suspect companies won't raise prices until they've run down inventories that they amassed before the tariffs took effect. They're stupid. It's stupid. Raise your prices now. If you know your replacement prices are going to be higher, you need to raise your prices now. The average economist in the journal survey expects Trump's tariff plans to add 0.7% to inflation as measured by the Consumer Price Index in the fourth quarter of 2025. Let's see. My number is 0.4, but I did say it could be 0.8 as a maximum. They're saying 0.7. Powell said 0.6. I mean, months and months ago, when I said 0.4 to 0.8, but probably 0.4, before anybody else was anywhere close to that number, I might have been right. Nonetheless, their average forecast of 3% inflation in December is down from an April forecast of 3.6%, though higher than the 2.7 predicted in January. The 2.7 is going to be too high also. While tariff hikes still seem likely to raise inflation in the second half of the year, maybe, probably, their impact will be partially offset by less energy and shelter cost inflation, said Bill Adams, the chief economist at 𝐄𝐦𝐚𝐲. The ultimate level of tariffs and thus the economic impact remains a wild card, according to JP Morgan economists. They estimate the average U.S. tariff on May 12th, after Trump rolled back levies on China, were 12.2. I said they'd end up being around 15. Tariffs since announced on steel, aluminum, copper, and Vietnam and other countries have boosted that to 14.6. 14.6. And other tariffs floated by Trump would add another 6.1 percentage points, they estimate. No, they won't, because they will be averaged down. The labor market's outlook has also recovered since April, though not to January's levels. Economists expect employers to average 74,000 per month instead of the 100 and what do they say, 40,000 per month, up from 54,000 in April. They forecast the unemployment rate rising to 4.5% in December. Yeah, maybe because of the federal government layoffs, maybe. And but they earlier were thinking it'd be 4.7, so that's improving. That may give the Fed a little more time before cutting its interest rate target. On average, economists see a midpoint of that range ending the year at 3.94, up from 3.79 in April, implying 1 to 2 quarter point cuts this year. That is, of course, what everybody's still planning for. Some people are saying that Federal Reserve Chairman Powell may resign tomorrow. Other people from the Trump administration are saying that they have grounds to fire him based on this massive spend that the Federal Reserve has done on their building, which the overrun alone is more than most federal buildings cost to build. Economists see Trump's mega bill adding 0.2 percentage points to economic growth in 2025 and 3% in 2026. Of course, Besant would argue that it's going to be much better than that, maybe a full percent. But they also see stepped up deportations and decreased immigration. Wow, fully offsetting that, shaving 2% and 3%. Wow, from annual GDP growth. I think that they're right about the shaving of the GDP growth. That is, I think they're 100% right that the GDP growth will be negative because of immigration, that will have an impact. But I do believe that the increase in the overall economy, partially because of the big beautiful bill, will be closer to 1%. We'll be looking at 2.8 to 3% as Besant projects. Immigration helped power growth significantly over the past 2 years, said Joel Naroff, who runs his own consulting firm. This will wash out going forward, said Randy Kirk multiple times over the last few months when nobody else mentioned it, period. Go ahead, look it up. 𝐒𝐦𝐚𝐲 says China is dealing with severe deflation. China's producer price index dropped 3.6% year over year in June, the sharpest decline since July of 2023. This also marks the 33rd consecutive month of factory gate deflation, one of the longest streaks on record. Meanwhile, the consumer price index increased by 0.1% year over year, ending a 4-month decline. However, excluding precious metals, CPI remains in deflation. Weak domestic demand, overcapacity, and price wars continue to weigh on prices in China. Their deflationary spiral is intensifying. Okay, so what's coming up this week? We have the consumer price index on Monday. We'll see what our numbers are, and I think these are completely wrong. So last month it was up 0.1%, which was fantastic for the headline number. They're saying it'll be up 0.3, which would be not fantastic. I think it will possibly come in at 0.2, but it might actually come in at 0.1. So there you go. I think it's going to be lower than this projection. This is Tuesday, by the way, not Monday. I don't know what I said, but it's Tuesday, not tomorrow. CPI year over year, that was at 2.4 last month. They're saying that probably more because of difficult, a very good month last year in July, or last year in June, that this month, the June would be hard to match. And so it's going up, they think 2.7%, back to 2.7. I'm not sure about that. I would similarly, I'll take the unders on that. Core CPI was 0.1 last month. They're thinking it goes to 0.3. I think that is nonsense. I think when you take out energy and food, no, it will not be up 0.3, might even be only up 0.1. Core CPI year over year, they're thinking goes from 2.8 to 3. That was a little hard for me to call because of the comparatives from a year ago. Empire State Manufacturing Survey, down, was negative 16 last month. They're thinking it'll be negative 9. So New York still, they think New York's still having difficulty. A couple of Fed speakers speaking on Tuesday. That's always interesting. Wednesday, producer price index last month up 0.1%. They think it goes up 0.2. Why? No, I can't. There's no reason. That's the headline number. They have no guesses on the rest. Last month, the core was also up 0.1. The PPI year over year was up 2.6, and the core was up 2.7. I think these will all be relatively flat. I can't imagine why PPI would be going up at this point. Industrial production was up 0.2%. They think it'll only go up 0.1. No idea. Capacity utilization was at 77.4, and they think that will remain the same. More Federal Reserve presidents and governors and stuff talking on Wednesday, and we get the Fed Beige Book. That's always very interesting. We'll look forward to seeing that on Wednesday. Thursday, we get initial jobless claims, which last week were 227,000. This week, they think it goes up to 233. They're never, ever even remotely close to correct. U.S. retail sales last month were down 0.9. They're thinking those will bounce back to up 0.2%. Retail sales less autos last month was down 0.3%. They think that'll be up 0.3%. And import price index was 0.0, was a flat nothing last month. And there was some other import price information the other day, which would suggest it's still 0, but they're saying it'll be up 0.3. Well, that would not be bad. Nobody would be shocked and horrified if the import price index was only up 0.3. Import prices minus fuel, they think that'll be flat, I think, from up 0.3 last month. The Philadelphia Fed Manufacturing Survey also comes in this week. Last week we had nothing. This week we have everything. Down 0.4 last month, and this time they think it'll be down 0.3. So Philadelphia Fed still seeing negative in their neighborhoods. Business inventories flat, 0-0 last month, 0-0 this month, they think. And home builder confidence going up from 32 to 33. I don't think so, but hey, maybe. I don't think so. In fact, this goes on and on. And Friday, we have the housing starts going from 1.26 to 1.3. We have building permits, though, staying the same, 1.39 on both. So we'll see. I don't know. Are they seeing something I'm not seeing in the housing market? Consumer sentiment last month was at 60.7. They're saying that continues up to 62. That would be interesting to see. This will be the half-month report, though, which only includes, I think they only survey, I don't know, 250 people or something. Or maybe I think it's like that. 200. Anyway, we'll see what that survey has on Friday. Okay. Yeah. Oh, so I ran out of time. I had some stuff going on. I did not look at the bank results on Friday, and I didn't look at the earnings that are coming this week. I'll try to cover that tomorrow morning on the regular show, the After the Bell show in the morning. So look for that tomorrow morning. I'm so sorry. Okay, let's see where we are on the markets. Let's start with Tesla, which is, yes, definitely up $2.67 or 0.85% at 316. And again, it's been up and down a little bit, but it's mostly up. And given that this is a down market, okay, so that's interesting. Let's go ahead and look at the rest of the things here. Singapore had a great month or quarter. Like, I don't care about that. That was just a headline. Bonds are down 0.2%. So I would call that flat. We've got oil up 0.09 at 68.52. Brent similar. Natural gas up 3% at $3.41. So even though it's up a lot, we know that there's a lot of swings on natural gas, and that's definitely right in the middle of its range. Gold up 18 or 0.55% at 33.82. So it's staying kind of high. Silver has rebounded after falling the other day, a lot of profit taking, but now up another 0.41%, 39,115. That's a full, that is just about a half a dollar over its all-time high. And copper down 0.37 at 558. That's still a really strong number, but we know why. Okay, we have got we've got the, wait a minute, here we go. We've got Bitcoin up another 1837 to 119.5, kind of the number that we heard earlier in that report about Tesla's having so many Bitcoin, $1 billion worth of Bitcoin in their treasury. Pre-market for the equities, we've got the Dow down 157 or 0.35. That is at 44,442. S&P still about 125 points over its earlier all-time high. That would be down, though, 0.38%, and the NASDAQ down 0.4% at 22,868. Looking one more quick time here at Tesla, still sitting about the same, 316. All right, tomorrow morning, regular programming in the morning, but in the afternoon, we'll eventually get to Larry Goldberg around 4:30 probably, and then at 7 o'clock, it might be Brian Huang because Brian White is traveling. And then this morning, I did a video you definitely want to go back and look at on AI, on what happened on last Wednesday. I know you've seen a lot of people coming in and giving you their impressions about what happened last Wednesday. Well, I spent maybe 10 hours listening to all those people. I listened to so many podcasts over the last 2 days. 3 days. It's a record, I think, for how many podcasts I've listened to, plus read many, many articles. I will tell you that what I'm saying about AI is different than what those other people are saying. So I'm going to highly recommend, there's the card right there. Go back and check that out. I think you're going to appreciate the depth of what I had to say there. Coming up later tonight, in just a couple of hours, I have a very in-depth analysis of why Tesla should get in the solar business, why they can make them cheaper in the United States than China can make them and deliver them to the United States, even for getting tariffs and for getting, any kinds of benefits that they're getting from the Chinese government. Taking all that away, Tesla can still make them cheaper in the United States than the Chinese can make them in China. So I'm really hoping Elon is going to open up his super factory. You know, take a listen to that. That's up later tonight. I think hopefully you'll find that extremely interesting. That's all. I think, is that all I got to tell you? I think that's it. I think there's no more. So I will say adieu for now, and it has been great talking to you.